So if you're involved in India's tax system, you know the end of October was, well, incredibly tense. But then, on October 29th, one single announcement completely changed the game for millions of taxpayers and professionals. We're going to break down what this last-minute tax deadline extension really means, why it even happened, and what it signals for the future.
So, be honest. Were you feeling that pressure? That looming October 31st deadline for your audit reports and tax returns? Scrambling to get everything filed, worrying about those penalties? Yeah, if that was you, you were definitely not alone. Not by a long shot.
Well, okay. You can finally take a deep breath. The Central Board of Direct Taxes, the CBDT, has officially stepped in and granted a pretty significant extension. That frantic rush is over, at least for now.
All right, so what exactly has changed? Let's get right into the details of this announcement from October 29th, 2025, and break down the new dates you absolutely need to have circled on your calendar. Here's the key takeaway. It's all about one new unified deadline. As you can see, both the tax audit report and the income tax return for audit cases have been pushed from October 31st all the way to December 10th, 2025. Now, this isn't just a tiny shift. We're talking about a full 40-day extension that syncs up these two critical filings. It gives everyone some serious, much-needed breathing room.
So, a big move like this doesn't just happen in a vacuum, right? This was the result of a perfect storm. We're talking technical glitches, immense pressure on professionals, and ultimately direct intervention from the courts.
This timeline really tells the story of how the pressure just kept building. So after an initial extension from September 30th, the system pretty much hit a breaking point as that October 31st deadline got closer. This is what prompted two different high courts to step in, basically forcing the CBDT's hand to create a single nationwide deadline to make sure things were fair for everyone.
Let's really break down those pressure points. First, the official tax portal itself was struggling. Major slowdowns, system outages, the works. Second, you had chartered accountants who were just completely buried, trying to juggle deadlines for GST, TDS, and company filings all at once. That led to the third, and honestly the most critical step. High courts in Punjab and Haryana and Himachal Pradesh ordered extensions for their states, saying it was a matter of fairness. So to avoid total confusion and different rules for different regions, the CBDT just made the extension national.
And this right here is a really important point to grasp. It is highly unusual for high court orders in a couple of states to directly cause a nationwide policy shift like this from the CBDT. You just don't see that very often. It really underscores just how critical the situation had become.
Okay, so this new date on the calendar, it creates this huge ripple effect. Let's dig into what this extension actually means for you as taxpayers, for the professionals, and even for the government itself.
For you, the individuals and businesses, the benefits are pretty immediate and obvious. You've got more time to make sure your filings are accurate and free of errors. But here's the big one. You get to avoid those hefty late submission penalties under Sections 234F or 271B. And of course, there's a huge reduction in that last-minute, pull-your-hair-out kind of anxiety.
Now, what about the tax professionals? The CAs and audit firms who are right in the middle of this storm. For them, the relief is just immense. It eases that crushing workload, which in turn means they can do higher quality, more thorough audits. Plus, it lowers the risk of having a filing rejected just because the portal decided to crash at the worst possible moment.
And this wasn't just a relief for the people filing. It was widely seen as a practical, necessary course correction. A quote from Business Today put it perfectly, saying the decision balances compliance obligations with the operational realities faced by the taxpayer community. It's an acknowledgement of the real-world challenges people were facing.
But while everyone is breathing this collective sigh of relief, this extension also acts like a giant spotlight, and it's illuminating some deeper, recurring problems in India's whole tax compliance system.
This is the classic trade-off, isn't it? In the short term, it's a win-win. Penalties are avoided, workloads ease up, and more people end up complying. But the long-term problems? They don't just magically disappear. This extension is basically a Band-Aid. It covers up glaring portal inefficiencies and a chaotic, overlapping compliance calendar. And it really risks setting a precedent that, hey, these last-minute extensions are just the new norm.
And if you dig a little deeper, critics argue this is really just a symptom of a much larger illness, systemic inefficiency. It screams for the need for much stronger IT infrastructure. And ironically, this new December 10th deadline, it creates a brand new problem.
clashing with quarterly tax deducted at source, or TDS filings. So there's a real risk that this whole annual cycle of extensions just erodes compliance discipline over the long haul.
And that leaves us with a big question, doesn't it? Was this a one-time emergency fix, or is this frantic, last-minute scramble going to be the new normal every single year? Will this finally be the event that triggers the fundamental reforms needed to create a stable, predictable, and truly modern tax system in India? Well, that remains the critical issue to watch.